Good afternoon and welcome to the studio's Lunch and Learn series. My name is Michelle and I'm the marketing coordinator for the studio. The studio is an incubator innovation hub and co-working space. We're an anchor tenant in the Sydney Startup Hub and we support startups to success. To learn more about us, our memberships and facilities, you can visit our website on thestudio.org.au. Today, we're very thankful to be welcoming Daniel Hallawi, founder and CEO of KapVista, an investor introductory matchmaking platform. Daniel will be hosting today's Lunch and Learn session on how to get your startup investment ready. I'd like to encourage all our viewers to pop their questions into the Q&A or chat. Before we get started, I'd like to acknowledge and pay my respects to the traditional owners on the land on which we meet, the Gadigal people of the Eora Nation. I'll hand over to our host now. Thanks, Daniel.
Thanks for having me, and it's great to be here. So today I'm going to talk about getting investor ready. Now it's a term that's been thrown around quite a lot, but getting into the what it is sometimes difficult to get in. But we're going to try and keep it simple today. Go through what getting investor ready means, both the mental side and the physical side of it, and then how to put yourself your best foot forward in front of investors. So we'll start with the term getting investor ready. It comes down to two parts. The physical side is what you can do to prepare, your materials, your business, the structures, things like that. And then the mental side of it is understanding you yourself. And if you're ready to raise capital. So the physical side of it, there's a few topics that we can touch on, including, we'll start with the deck. The deck is the initial deck that you will put out to the wider audience should be very simple. It should have the problem that you're addressing, the solution, who you are as a company, who you are as a team, the market and the opportunity. And at a very high level, that's what you use to go out to the wider audience. Once you have an investor who is interested in that, then you have a much more in-depth deck. You have financials and projections and everything else like that. But in order to go out to the market, the very high level deck is what I would suggest. Now, with the deck itself, it needs to be visually appealing. It needs to have just enough information to get your intended receiver interested, but not too much that they're drowned out. The average investor or someone looking at the deck will spend, I think it's around 3 minutes and 44 seconds on average going through the deck. And they form their initial opinion within the first 30 seconds. So it needs to look professional. It needs to look visually appealing, and it has to have information that is grabs their attention and entices them to read more. Now, the two slides that get more attention than the rest is the financials. So your industry or your market financials and the opportunity there, and the team, who you are as a team. That's, if you can outline who your team is and what their previous experience is, that will give the investors a good idea on why you are the right person to make this or why you are the right people to make this startup a success. Now, in terms of the team, that's another topic in getting investor ready. So you have to have the right team in place, both foundation team and management team, as well as your advisory team. That can make or break your investment deal. Having the right people on board and the right people around you is key to raising capital. And you want to give the investor confidence that the people that you have assembled are the right people to get the job done. That is key, because especially at the early stages, the investor is investing in the team more so than the product or what you're doing. because there's countless ideas and early stage startups out there. It's the right ones who will make a success of it. The next thing to sort of understand and get ready is the networks. How are you tapping into your investor networks? How are you going about and finding these investors? Is it pitch events? Is it working with networks like KapVista itself, or the studio, or one of these other hubs that provide access to resources and to people in their own ecosystems that can connect you with the right sort of people. So before you go out to the market to raise capital, you have to plan and prepare. How are you going to get in touch with these people? Is it your own networks? Is it people that you know? Is it people that your friends know? Is it ex-colleagues, ex-companies you used to work for? Is it these are all things you have to sort of plan your approach and your attack per se. The other parts of the physical is the art of selling. You have to understand how to sell your business. Being able to articulate what you do in a easy to understand way and sell your offering is incredibly valuable. You need to be able to, and the idea of a 60-second pitch is precisely correct. You need to be able to let people know what your business does as simple language as possible in under 60 seconds. And being able to sell what you do and the value in what you do in 60 seconds is key. The last part of the physical is mastering the art of presenting. I always refer back to the term KISS. Keep keep it simple, stupid. So pitch your idea, pitch your presentation to family and friends. Imagine you're presenting to a 16-year-old, boy or girl, and if they can understand it, that is the best way possible. One second, I'm just having a bit of technical. Here we go. It's so. Mastering the art of presenting, pitch to family and friends, get their thoughts and feedback, get their the way that can they understand what you're doing? Can they understand your messaging? Can they understand the opportunity? People who are outside the startup space, and get a new perspective. If they can understand it, then you're able to present it to a wider audience, and you're not going after that very niche investor. So practice your presentation, your pitch. Do it in front of the mirror a few times. Get the presentation right so you are able to articulate your presentation, and you can keep it as precise as possible, and you're not making mistakes and having to go back and check things and come back to it, because you've got that one shot to make a first impression. So that's the physical side of it. The mental side of it is the part where most people don't touch on. So the first thing that we'll talk about is the opportunity mindset. So being able to spot opportunities, be ready to present your presentation as quickly as possible. Be prepared to present it at a moment's notice. You can find investors anywhere. You can find them at the coffee shop. You can invite them at the cafe, the lift. You can find them at co-working spaces. You can invite them anywhere you are. you're moving around and connecting with people, you can find investors anywhere. Also other things to consider is understanding who the investor is you're trying to target, getting into them with their understanding their getting into their shoes, understanding their mindset, understanding who the right investor is that you want to target. Is it a smart investor? Is it someone with just capital? Is it someone with networks, with strategy, things like that? And understanding what is it that they're looking for. You would have to, this is a process, and it might be a bit of a research sort of game, going through, having a look at what sort of investors are out there, and putting your dream board, your wish list. Who would you like as part of your team? Who would you like as part of the journey? And getting in bed with the right investor is key, especially at the early stage. The other part of it is, the exit strategy. Not only where you'd like to exit as a business, but understanding your limitations as a founder. Understanding what's your ceiling. There is only a handful of people on the planet like your Jeff Bezos, your Elon Musk, your Mark Zuckerbergs, your Steve Jobs. There's only a handful of people that can take a company from zero to multi-billion dollars. So most founders are able to get it from 0 to 10 or to 100, and then knowing where your limitations are and where to tap out, where to move on to, bring someone else in who can take it to the next step. So understanding that, and understanding where you'd like to your business to exit. Is it an IPO? Is it a trade sale? Is it being acquired by a competitor? What's the exit? Having that in the back of your mind is key to raising capital, because the investor wants to know, well, where do they go from there? And then lastly, when getting investor ready, is also what are the alternate source of financing? Is it just equity you're looking for? Look at what else is there. There's, can you bootstrap? Can you unlock capital from R&D? Is there debt financing, invoice financing? Is there grants available? What can you do to look at other options besides just the going to market for an equity raise? Is there other options? Because sometimes, if you can get R&D credits, or you can get a government grant or university grants or something like that, or sometimes debt financing, it means that you have to give up less equity, and you dilute yourself less. So that's at a very high level what getting investor ready is, and obviously we can dive deeper into each one of those points. But I'm happy to take questions and work through any of the participants. So I'm trying to share my screen, but it's saying that if I share, I'll have to log out of Zoom and log back in. So I can't share my screen, but I do have an ebook prepared that Michelle can share around after, that she can share to you, that has these points and more in there. But there are a few questions here. So what type of investors do I typically deal with? So my day-to-day is I deal with high net worths, angel investors, sophisticated investors, family offices, venture capital funds, PE funds, that all have different needs and wants. So for me, it's understanding what those investors are after and finding the right deal to fit. And then we co-invest alongside those investors into some of the deals as well. What do investors typically ask for in terms of equity for a startup? that has a prototype ready to go to the market. So the valuation of the startup is, I get this question quite often, and valuation is a relative figure. It all depends on what someone's willing to pay. If you have a valuation in mind, as long as you can justify that, then it's a good starting point. You've always got to be negotiable. You've always got to go into capital raising willing to negotiate. You might think your business is worth $1 million, and an investor might say, well, I don't think it's $1 million, it's 750. So you got to come to common ground. And based on that, how much you're comfortable giving away, what you're raising, and what the investor is bringing to the table are all questions that need to be asked before you can justify how much equity you're giving away. So have a figure in the back of your head, and this is for pre-revenue startups. Obviously, once your startup is making revenue, there is other metrics and multiples that you can use to justify your valuation. But your pre-revenue, and it says prototype ready here in the questions. Pre-revenue is what someone's willing to pay for it. It's what you and what the wider market will put a value on the technology or the idea that you've come up with and how you're going to execute. So my advice is to have a valuation in the back of your mind and be willing to negotiate and see what the market is working on there. Can you give an estimate percentage based on your experience? I don't know what the company is. I don't know what you're doing. I don't know what the market is. So based on my experience, it's how long's a piece of string. It all depends on what comparables out there. Is there any competitors in the space? What do they raise at? What is the investor bringing to the table? Are they bringing just capital? Are they bringing expertise, strategy, networks? What are they doing to help your business grow? Will all justify as that equity percentage. If it's just capital, it may be one figure. If it's capital and they're on the board of directors and they're an advisor and they're contributing, they're opening up their networks, they're connecting you to potential partners and things like that, then it could be more. Do we have any tips for negotiating equity? Yeah, so this is an interesting one. The tips I would say is be reasonable, have an idea in mind, do your market research, see what other companies have raised at, how much equity they've given away, and have that in put into a book, do a bit of homework around it, and have a figure that you're comfortable with, and then go to market with that. It's like when you're buying a car. You know what the general market value is for the car, but you obviously want to negotiate a price that works for you. Similar to equity, you know what you have. You know what you're building. You know what the market is dictating. You know what comparable companies have raised at and given away as equity. So you can have a safe assumption what your equity, your value is worth, and then you can go to market with that. Don't give away too much equity for someone who doesn't bring value to your business. If it's just capital, capital is available globally. What you need is the right people in the team to help your business grow. So what are they bringing that's different? So have that in mind when you're negotiating. But it always helps when you're in a conversation, in a negotiation, in a deal with someone who is who understands your business, understands what you're doing, and understands the space that you're doing with, so they know where you've been before. So ex-founders who turn investors are, can in most cases make the best partners. So look for VCs, look for angels, look for sophisticated investors who have been founders before, who understand the space you're in and the stage you're in, because then they will be a better partner to grow the company with. The next question is, do Australian investors expect more equity compared to US and UK? My thoughts on the Australian investment ecosystem, they are changing. It was that Australian investors are very conservative. So they want to see you hit certain milestones and making revenue before they invest. And there were a lot of roadblocks or speed bumps before investing into early stage pre-revenue startups. That is changing now. So Australian investors expect a lot more, not just in terms of equity. In the US and the UK, they're investing much larger checks into earlier stage companies. So they're used to it. It's a more mature market. They look at Australia as an untapped opportunity because US investors can come into an Australian company that's a lot further along than the US counterparts for a smaller check size, and their risk is significantly mitigated. So it's a good time to be looking at the US and the UK for investment. Okay, so the next question is, are there any good debt funding sources available for startups? CBA says they would give 50 to 70% of future contract and existing support revenue in place. There are a lot of really good debt funders and people who deal with brokering debt deals in Australia, outside of the big four banks or the traditional lending system. Having been through the process before with the small business and having to in order to get a business loan, they wanted you to securitize your property in order for the loan. Where if you're an early stage founder, you may not have property, or it may not be ideal to put security over your house to borrow money. But there are other private lenders that work well in the space. So the next question is, can you tell me a bit about KapVista? It seems that KapVista is a platform where KapVista Ventures is a separate fund. So the way that KapVista works is there's two parts to the business. One is the platform where we matchmake deals. We are a hands-on process. We actively matchmake. We pick up the phone. We work with our investors on a very regular basis, and we talk to them about the opportunities, and then we make warm, verified, vetted introductions. KapVista Ventures is a fund that sits alongside the platform, and we co-invest with our investor networks into some of the deals that come across the platform. So it is two separate businesses, but they are intertwined. Once approved, how long does it take for funding process to occur? How do you work it out into your plan? So in raising capital, I would assume that raising capital can take anywhere from 6 to 12 months. So if you have 9 months as the timeline and the process, that would be a very safe assumption into raising capital. You need to look at it like, if you look at raising capital like a marketing exercise, you need to have a time and a budget prepared before raising capital. Raising capital is not cheap, it's not free. Even if you don't use a platform like KapVista or Birchall or Equitize or a corporate advisor or someone else to help you with your raise, you need to have a budget set aside to raise capital, because you need to present at events. You need to be willing to outside of COVID, obviously, fly to meet investors, to have coffees and dinners and lunches and that sort of thing. So it takes a budget, both time and money. So have that into your plan, that you be prepared for a 9-month process, but you can reduce that time significantly if you have all the material in place and you have a good legal team that are prepared to work on your opportunity. Because sitting on documentation, sitting on lawyers' desks takes up most of the time. Do you have access to US and UK eventually, especially given my startup major markets will be US, UK, and Europe? Yes, we deal a lot with the US and UK. My day personally is split into threes. 6 a.m. to 10 a.m. is the US, and I do a lot of US calls with investors in the US. 10 till say 4 is Australia and Asia, and then 6 till 9 is the UK and Europe. I've been in this space in the startup investing space for about 7 years now. Prior to that, I had my own early stage, I had my own fintech startup that I exited. And before that, I spent 13 years in finance, wealth and funds management. So I've been able to build up my network globally over the last, 15 to 18 years, and working with a lot of networks and a lot of investors. So the next question is, a US investor would expect you to set up an office there if they were to invest, given that they wouldn't be able to take advantage of tax breaks by directly investing in an Australian business. Some US investors, some VC funds would require you to set up a US entity, but that I've just done it for KapVista. It cost me $700 and about 6.5 weeks to get fully set up, including the tax process. You can use a platform like firstbase.io that is very, very simple and easy to use, and that will help you set up a US entity and you can take investment. But a lot of the private investors will invest directly into your Australian entity. Okay, so the next question is, how do you find the private investors? How do I find the private investors, or how do you find it? For me, I've been in the space for, as I said, 15 to 18 years, and my throat is dry. I'm going to cough here. I should have a glass of water, but I don't. I've been in this space. I've networked. Networking is key. Connecting with as many people as possible, connecting with as many networks as possible, reaching out to people, leveraging off everybody you've met, everybody you've connected with, to connect with the right sort of people. All it takes is that one conversation that will change the future of your business. You just need to find the right sort of people in place. Signal, NFX, and Angel Co are a good place to start for global investors. Yes. Yeah. So Angel List, Crunchbase, LinkedIn, anywhere you can connect with investors, but with using those platforms, you need to be prepared that it is a cold outreach. A warm outreach versus a cold outreach is always going to be a lot easier and to get a lot of things done. There's been countless stories where VC firms have missed out on Facebook and LinkedIn and things like that at the early stage because a general email went to their info at email box and sat there for 3 or 4 months and they missed it. So they missed the opportunity. So you can use those platforms, and by all means, I'd be using those platforms and tapping into them. But a warm, relationship-driven network is always going to have a better outcome. So what's this? I usually approach company CEOs direct, seeking funding or sales contracts for the startup. Both keen, however, to build a prototype first. If I go direct, would I need to use a firm like KapVista? Again, it's more that warm introduction. Sometimes a warm introduction can speed the process up, can get you to the right person quicker. If you go to Coles, the CEO of Coles or Woolies, generally they wouldn't be checking their emails or their LinkedIn or anything else like that. It would be their gatekeepers and their assistants or secretaries or someone in their team would be checking that for them. So it may get lost in the approach. Whereas if you know someone who is connected to that person that you want to go through to, then that might have a better outcome. Does a patent add value? Yes, it does. But sometimes going through the patent process means you have to open up your secret source. So it all depends on the markets that you're going for the patent in and what the intended product is. But owning IP is definitely of a high value. I would, if you have valuable IP that is patentable, I would go through the process. It is very expensive, but at the end of the day, you have an asset that you can, if all else fails, you can then sell that on. But it is value and it does protect you. Does it add value to raising capital? Yes, in certain examples, yes. I think that's the last question we have here. There are a few resources that I would recommend. So the studio has a founders program that's highly valuable, that can connect you to the right sort of resources, and they also have the Pitch Lab, which is a half-day intensive pitching course, which I do recommend because you can never have too much practice perfecting your pitch and your offering. So courses like that are highly valuable. I'd be looking into the Founders Program and the Pitch Lab and seeing if that works for you. But I highly recommend them. So I've given a copy of the ebook to Michelle to share around. So if you're interested, please let her know. The ebook is something that my team put together just from what we've seen, what we've had to deal with, what we've noticed in the market and what investors are looking for. So it's a resource that I'm happy to share and happy for you to use. And if you have any questions, my details are on it, or my team's details are on it. We're happy to talk. So there's one other question. Does KapVista work with people online? Yes, we do. 40% of our business is domestic. The rest of it is made up of international deals. So most of our work is online. We work with companies across the globe. So yes, certainly we do work with people online. And I think that's it. Doesn't look like there's any other questions. So we'll wrap it up, and I think Michelle will come back on and let you know all the details.
Hi, Daniel. Thank you so much for that. That was very, very informative. So as Daniel mentioned, I will be emailing everyone a copy of KapVista's ebook, which will be shared to all attendees. And also, as Daniel spoke about, the studio also does run a fantastic founders program. We actually just kicked off a new one this week. We also run an intensive pitch lab course, which I've shared links to, but that can all be found on thestudio.org.au. Thank you very much, Daniel. Thank you, everyone.
No problem. Thanks for having me.
Bye.